Hey everyone, welcome back to the channel. I'm Greg. Today I'm going to take you through a simplified breakdown of the current stock market and the potential pullback we're about to face. So between looking at the hedge fund sell-offs as well as the current state of the economy, the lack of stimulus, as well as all the new traders coming in, pumping up the stocks, I do feel that the tech stocks like Apple, Tesla, are about to get a significant pullback. And if you've been making profits in the market, it's not necessarily something you want to lose, so it's just something to kind of keep an eye out for. Then also have a couple suggestions for, if you don't currently hold these stocks, what to kind of do in the future to potentially profit off them when they start to go back up again. So moving on to the technical aspects, we're going to take a look at Apple first. So as you can see here, tech has been extremely bought since the bottom of the market here on March 20th. It's just been going up and up and up. On the other aspect, hospitality, airlines, cruise lines have all just been hammered, because of the current pandemic. And probably the only safe buy since March to now was buying tech because it was continually going up and up and up. But at this stage, you have these investors and you have new investors buying stocks to try to make money during this pandemic. And this doesn't necessarily reflect the current state of the economy. Here in the US, we've only got one stimulus check. And as far as I'm aware, unemployment's doing better, but it's not doing amazing. So you can look at this chart right here and you can see Apple has been extremely overbought. And probably the evaluation of it might be a little bit high. But as you can see the last couple of days here, we have it turning red on the MACD. If you don't know what the MACD is, this is basically stating how many people are buying versus how many people are selling. So green days, or when the MACD is green, more people are buying. When it's red, more people are selling. And then as you can see here, typically they kind of go in a pattern. And how many people are buying versus how many people are selling typically translate directly into if the stock price goes up or the stock price goes down. So as you can see, it has had some massive sell-offs. You can contribute to this to probably a lot of hedge funds, just taking profits, just locking it in. I mean, they have to show good gains for their clients, and this is a great way to do it and a really good time to do it, especially post-split for Apple and then Tesla, what we're going to look at next. And Tesla has definitely been one of these stocks that has been affected by new traders. It's also a low float stock, so it's always been extremely volatile. But in my opinion, it's still slightly overvalued. I would like to see it a little bit lower. I would like to probably see it drop towards 350 before I'm going to buy it again. I do currently hold Tesla. It's not a big holding. I have never been extremely successful at holding Tesla just because the volatility of it makes me slightly uncomfortable, and I try not to trade stocks that I'm uncomfortable in. Typically, I like to be in either stocks that are significantly cheaper or stocks that are safer. As I get older, I like to be safer and safer with my trading. So typically I do like to go for the Apple, Microsoft, and things like that, but that's just a personal preference. So as you can see here, earlier in the day it was actually down. It's actually starting to rally back. I had a resistance at 405 and it bounced right off of it. And then again at 394 there, and then it dropped all the way down yesterday in after hours to 372. Or somewhere right in that range. It just bounced right off that resistance line right there. And then it's actually come back up and is trading at 408 right now. It is, let's see what time this is, 1:28, Friday, September 4th, which is actually quite surprising. I thought we were going to have a huge sell-off today. So this one scares me less than I was this morning. But still, I don't like it, and I think that we're going to continue to see a sell-off, especially with Labor Day coming. The market's going to be closed Monday. I don't think that we will continue to see this huge influx of money going into these big companies, in the tech industry, Apple, Tesla, Microsoft, things like that. And then we'll start to see a pullback. I mean, the market doesn't always go up, so it's good to be prepared to kind of go with the flow. Buy low, sell high. Wait, buy low, sell high, unless you're going to short the market, but that's more of an advanced strategy. So right now, if you don't currently hold any stocks, and I know we just looked at these two, but the more we look at it, the more complicated it's going to get, and the longer this video is going to take. And so some things to do right now, if you don't currently hold any of these companies, is open a brokerage account if you don't currently have one. I personally don't like Robinhood. I've had some negative experiences with it. I know some people that have. So I use TD Ameritrade. I've used TD Ameritrade for probably 12, 13 years now. I've never had an issue with it. It's not the prettiest. So it's not going to be the most user-friendly or pretty version like Robinhood. Robinhood's much more attractive to look at. But TD Ameritrade has implemented free trading, which is a big plus in my opinion, even though it's not that great. There are a lot of other great platforms out there. M1 Finance. I have friends that use Scottrade. It's really just up to you. What I'm showing you right now is Thinkorswim. Is actually a free software to use. It's just TD Ameritrade's desktop version. So if you don't currently have any stocks, start a brokerage account. But if you have a brokerage account, go ahead and start saving up so you can load some money into it, because I think we're going to see a massive pullback. And then when that pullback comes, then you can buy stocks basically at a discount. It's kind of like going shopping at Walmart with a 20-30% off coupon. Why not go and buy everything you can? But to be able to buy things, you need to be able to make sure you have some money saved up. So, I know it's kind of difficult with the pandemic going on, but if you have a little bit extra cash or some way to move some money around so you can, start investing, that's another way to kind of take advantage of these sell-offs that we're about to see. If you like this video, go ahead and hit that like button. If you want to see more content in the future, hit that subscribe button so you can get that notification. But yeah, I will catch you next time.